Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. If you are traveling, folks, please be safe. Market-wise, let's take a look at it out here. We have the Dow Industrials up 24, NASDAQ up 4, S&P's are flat. Gold contract up $1.60, trading at $1,197 an ounce. Silver up 21 cents at $16.59 an ounce. Platinum up 20 bucks at $1,224 an ounce. Copper down 4.5 pennies at $2.95 a pound. Light sweet crude down $1.79 at $74 a barrel. Bonds are screaming, folks, that the market's going to go south. Bonds, the 10-year is up 10 ticks at 127.04. 30-year is up 28 ticks, almost a full point at 142.30. King dollar down 251 ticks, trading out at 87.95. You get the euro up 31 at 124.74, and the yen is down 34 at 117.93. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Cash S&P has hit 2074. Right now, you're at 2068. And volume-wise, we're going to come in at, let's see, we're at 387. We're going to come in around 700,000. We go to 700 million, rather. We take a look at the Dow Industrials, up 26 points. The high that was generated on Friday was 894. We've hit 854 thus far. I do expect that baby's going to get hit. More than likely, you'll see it get hit tomorrow. Tomorrow is going to be really a slow day. Of course, you get Thanksgiving evening, the eve of Thanksgiving. What you also have, though, is that you have a storm that's coming into the northeast that's going to slow things down on top of that. NASDAQ Composite. Composite hit a price point today of 4474. New highs in the composite. Composite also will come in with volume of about 1 point. Actually, this is interesting. We're at 1156 on the NASDAQ. So the NASDAQ will actually come in at about 1.665, which is higher than yesterday, which is saying something. It's not saying that. It's still saying it's light volume, but you do have an expansion of volume. Gold contract. We take a look at gold now. What's going to be really wild here is this, folks. The gold contract is building cause to get through the October 30th downdraft. That number, the specific number on that is 1202. And it's amazing. We hit, well, here, let me get the exact number, because this is bizarre. It's 1202.40. Now, that's when gold on the 31st went from 1202 to 1160 with juice, with volume on the way down. We hit 1202.20 today. The way that we're building cause in this contract is saying we're going to break it and get up above it and through it. Once you get up above that 1202.40, if in fact we get through there with conviction, you're going to see the price point of 1255 very quickly, and that's where we'll build cause to get up to the July highs of 1341. So there's some real action inside the gold market. We'll do that correlation inside the dollar in a few seconds. We go over to the oil market. So what's encouraging here is this, is that you have oil going south with conviction. We take a look at this oil market. Oil is down 2.3% today. We're at 73.98. Now, the ABC structure on the way down is 70 bucks. What we have with oil out here today is that your last swing low in oil, it was established on the 14th of November. We had volume out there of 152,000, and we're pushing into that with 270,000. There's going to be an OPEC meeting on Thanksgiving, and the way this market is trading right now, guess what? What is specifically telegraphing is that they can have an OPEC meeting all they want, but none of them are going to cut back, or they're not going to cut back enough in oil production, and oil's going to go to 70 bucks. The great encouragement of how the oil market is trading and how the gold market is trading, how the dollar is trading, is this, is that if we go over to the dollar, we take a look at the dollar, what we've had is this. The dollar index hit a high yesterday. Gold didn't get destroyed. Okay, pulled back slightly, had lighter volume. They couldn't destroy the price of gold. We hit 88.51. The 2010 highs and the dollar index is 88.81. So we missed that by 300 ticks. You know, we'll see whether that's it. Now, when you take how the dollar has traded, how gold is traded, how oil is traded, and now we're going to put on top of this is the bonds. The bonds, folks, have been screaming for a long time that they want higher price. The bond market, TYZ, here we go. So the bond market on October 15th has wide price spread, accelerated volume, blows topside. The 10-year traded up to 130.17, okay, which is almost unheard of, meaning in one day, that type of move. Well, what we've done today is this. You have wide price spread again. You have accelerated volume. We've done 2.4 million contracts. And we're at 127.03. The low of the high is 127.07. So what you're doing is you're coming into that low with conviction. That's saying to me, guess what? We're going to get into 127.02. Actually, 127.07, and more than likely, we're going to see the 130.17 very quickly. We go over to the 30-year bond, and the 30-year bond has been leading the charge in an extraordinary way. 30-year bond out here today is up almost a full tick. We're up 27, full point rather. We're up 27 ticks. We are trading at 142.29. We have 796,000 contracts. You know what that just did, folks? This is a confirmation, number one, that you have a much higher probability that you're going to get to the high. Why? Because the 30-year is already into the low of the high in the 15th. That was 142.13. We're into that by over 20 ticks. This thing is going. Okay, so now put it all together. When you have a gold contract that won't back off, you have a dollar that hits the highs, you have an oil market that goes south, you have a bonds that refuse to back down on a continual basis and go north, the real question is, when is the S&P going to fall apart? Because we're at highs, you have light volume. Let's go over to the small caps. The small caps haven't tested their high out here yet. Small caps got the Russell 2000 today, got over the swing point from the 13th. It's going to close underneath it. We hit 118.78. We're at 118.25. Bottom line, there's no juice up here. The divergence inside the small caps, meaning you can't even make it to the high, are pretty incredible. Now, I don't think this is going to happen before Thanksgiving, before this week, actually, because tomorrow is going to be really slow. And, I just don't see it. Next week, a different ball game. Let's go to Tony in Wellesley. Hey, Tony, what's going on?
Hi, Tom. How are you, buddy?
I'm doing great, man. How you been?
Good, real good. Listening every day.
Happy Thanksgiving, man.
You too. All the best to you and your family.
Thanks so much, and you also, man.
I'm looking at the TZA. I'm buying down at these levels. How high do you think it can go?
Let's take a look. So the TZA, folks, is the direction 300% inverse correlation of the Russell 2000. The low of this year is 1272. That's today. The high is 2058. And, okay, so let's take a look at this. So what we did out here today is that you get to 1272. You're at 1298 right now, and if you get a failure, I mean the IWM itself failed on lighter volume. This also got under the low, did it with lighter volume. I mean, the TZA wants to go to 1772. That's the low of the highs. The last high is 1959, and yeah, I can get there. You just gotta, you know how these direction shares and pro shares trade, Tony, okay? They're daily investment vehicles.
Yeah, you don't marry them.
You don't marry them, brother.
Thank you.
Have a great one, man. Have a safe one.
Good to hear your voice, Tom.
You too, man. Stay right there.
Bye-bye.
We're coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dow Industrial's up 30, Nasdaq's up 6, S&P's a flat. Let's go to Tom in Tampa. Hey, Tom, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day?
Yeah, sure am, man. Sure am.
Hey, we got our lightning going, man.
It's about time, right?
It is, and it's great, man. It's a beautiful thing, totally.
It's a very beautiful thing.
It is, man. We got some action, folks. The Lightning are a dynamite hockey team, man, big time.
Yeah, I wish we could get the Bucks going, but hey, that's another story.
Oh,
right?
that's going to be another century, I think.
Yeah, I think you're right.
United Parcel, right?
Yeah, UPS, Tom, January 17th, 2015 calls. I'm looking at that strike price there of around 120 or 125. You think that's viable? Or I mean, this baby looks like it wants to run about to 150.
Let's take a look. So you got the UPS. Of course, we all know UPS. It's just a monster. They're coming up to the holiday season. They're going to push out a lot of product. The low's 93. The high is 109. Okay, so let's see what we have here. I believe we do have on a monthly basis an ABC structure on the way up. Okay, so we bring this back. It was 83, 37, 40, 45. There's 124. Let me bring this back just a little bit further. Okay, so I got this back 15. So when it broke topside, okay, so there it is right there. That's where you're coming in with volume. So if I go 71 to 105, that's 30. That's going to be a tight one, Tom. I think this is like, right now, it looks like 120's there. You know, if you haven't done this yet, what is going on is this. It seemed, I believe, let me just bring up FedEx for a second. I think FedEx is a better confirmed ABC structure on the way up than UPS is.
Okay.
Let me just bring this back.
Just thinking with these gas prices and transportation index.
Yeah, see, okay, so it is. And what's going on is that, there it is there. So FedEx is stronger than UPS. FedEx, 120, 34, so that's 85. Yeah, see, FedEx, so FedEx is saying it can go to a couple hundred, and you're at 175. You know, it's stronger. It's stronger than UPS. So I think that going out that far, price-wise, at UPS would be a little dangerous.
Okay, so you think FedEx going out that far? What are you thinking? You think it's going to? You think it could possibly get to that 200 area?
Yeah, I do. Yeah. Yeah, because FedEx just had another sign of strength on the 21st, two days ago. Cool. It just took out. Okay. Yeah.
Hey, you got time for one more?
Sure.
Can we take a look at the puts on IBM January 17th, again, 2015? Strike price 150.
So that's be 2 months. Okay, so when this breaks, okay, it's a large ABC down. The 8 point on this is $1.80 conservatively. The B's 160, so you get that gives you 150, 145. Yeah, I think they. Yeah, you know what I would do here? I think I wouldn't do the FedEx or the UPS, and put the bread into IBM. IBM is much higher probability trade. You're going to get that, man.
Okay, 150, that January area.
Yeah. Okay. You know, don't pour everything into it because you're out of the money by a big thing. But that's plenty of time. This thing is banging on its bottom with big volume, man.
Okay.
Cooking, brother.
Thanks, Tom.
Okay, man. Have a great one. Have a safe one. Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, each and every trading day, Basil has an outstanding program right here at TFNN, 11 to 12 Eastern Standard Time. He also has a great newsletter. The opening call, you can test drive that by coming over to our website at TFNN. Go to newsletters, trading newsletters. You see the opening call right there. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day? Ready for a good Thanksgiving?
I certainly am, and I want to wish you and all the Tiger family just a wonderful Thanksgiving. It's just a wonderful holiday. One of my favorites.
There's no doubt, man. There's no doubt. And I guess you guys might get a little snow, right?
Tomorrow we might get snow. Thursday should be clear. I hope the family's able to travel safely. We'll see what happens.
That's great, man. That's perfect. Yeah. So what are we going to look at today?
Well, we're looking at the Dow chart right now, and this is very interesting. So there's 21, 22, 23, 24, 20. This is a 26th session since the October 15th low at 15,855. This is the Dow we're looking at.
Yeah.
There is one ugly candle. You were talking about IBM just a moment ago. That's that horrible day when IBM dropped 14 or 15 points.
Yes.
I think it was October the 22nd. That is the only down candle, sharply down candle in all of these 26. We've had tons of little doji where it opens and closes at about the same price.
Right.
So what I'm looking at here is that these moving averages that I've got here, especially this maroon one, is the 9-period moving average of 17,724. The reason why I'm looking at the Dow like this so closely is that we have, in my opening call, we've not had any short positions for a little while. And actually, since we switched to the long side around about the second or third day after the low was made in the Dow. So I'm looking now, because I think we started to raise some cash, and I'm looking at some kind of a pullback. One of the reasons why I wanted to stay long with the bars that we're looking at, the sessions that we're looking at, these candlesticks, is that the MACD, the moving average convergence divergence, has held very well. And I have a particular technique that says, in this particular pattern, not only could you get to the 5th and 6th highest peak, which is E and F, there's a chance you could even get to a 7th highest peak, which will be G. That's when you've got to be the most careful. So we're really close to starting to look at some short positions, and I'll explain what I'm looking at. One of the reasons why I've held off for this amount of time is that the BIB, which is the 200% long, the IBB, which is the NASDAQ biotech stocks,
Right.
stopped at a peak B, and I'm anticipating that somehow or other it should move above 126.54, which will give you a leg C, and then maybe it will get a D. Most importantly, when you look at, there are fewer and fewer of the biotech stocks that are actually carrying the sector itself. So I think that we're going to be seeing a rotation very soon, and that the NASDAQ biotechs, or the biotechs in general, will take a time out. That's the way I'm looking at it, and we haven't traded it to the downside yet, but we are really close to doing that. At the same time, the XLF, which we're also long, that's the financial, S&P Select Financial Spider, is in leg C and had a parallel high today. Well, the day is not young, so we don't know what's going to be at the close, but so far, the 2443 is the same high as yesterday, so this is leg C. It broke out from this particular pattern I call the falling axis. This is like a flag pattern, and it should go to a D. So we are so close in many regards, looking at least the signs of some kind of a top, and I've got some weekly charts here that are bumping into trendline resistance. So we're very close to making a switch in our portfolio.
Basil, you have a great holiday, safe one, and of course we look forward to the show tomorrow.
Thank you very much, Tom, and have a wonderful Thanksgiving.
Have a great one. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials are up 25, Nasdaq's up 6, S&P's are flat. And as you come over to our website, folks, at TFNN, what you're going to see right on the front page of the carousel, you're going to see our man, Mr. John Logan. He's going to be doing a workshop. This is all about the TAS Profile Scanner. You can test drive this scanner right now. It's an amazing software tool, folks. What it does is analyzes multiple markets in multiple time frames simultaneously. Okay, it's a very powerful tool. You can check it out absolutely free right here, right now. As you come over and do that, if in fact that's what you do, make sure that you go through the videos. The videos are very detailed. They explain what you're looking at, how the piece of software works. Just doing that alone, meaning you test drive it. John is going to be doing a workshop. December 9th, you get into that for free. Check it out on the front page of TFNN. It is a great tool, folks. And when you see how fast this analyzer is and what it can do to analyze markets, it's absolutely amazing. And that it doesn't matter whether you're a bull or a bear, it'll explain to you exactly what the market trend is in each sector. Okay, pretty cool. There's no two ways about it. Some of the high volume stocks out here in a low volume market today. This is what you have. Apple is, let's see, that's down 72 cents. You get Facebook up $1.57. Halliburton's down $1.59. You get Comcast up $1.58. Some of the Dow stocks we take a look at out here. American Express is up 41. Caterpillar's up 52. Oxy is down 202. Let's go over to the OXY. We'll go over to the oil and gas sector at this particular point. So Oxy right now, what it's going to be, Oxy may be the first equity that is making its way down into the high volume low of October 15th. Now, this number, this high volume low, this is a monster, potential monster ABC on the way down, folks. Your A point on this for Oxy is 99. Your B point is 82. So you're talking 17. Your C point is 97. You know, so what are it? 70, 74, 75. That level, we bring that back a bit, and what you're going to see on that level is that, there it is too. This is interesting because it's 66. This is going to be really cool watching. Okay, so check this out. We're going to learn a lot out of this. This is why. So 77, 75, 77 is the price projection on ABC down. What should stop this in its tracks is the high of the low of 2008. That's $70. So this is pretty cool because what you have is that you have a price projection first. Then what you also have is you have a high volume bar. And the high of that low is an extraordinary volume bar for a month. It's 290 million. Last month we only came down with 135 million. So what can you learn from this? Okay, so when you're coming to a high volume bar, and in particular the 2008 bars are really cool to watch because this bar is a monster. If in fact you got into that bar and you had an expanded volume, be like, oh my God, you got to be kidding me. Because that would mean that, yeah, you can go to the bottom of it. More than likely, what should happen, particularly the way that it came down last month. Last month, 135 million versus 290 is saying you do not have enough juice to go break that bar. You do have enough juice, however, to hit the top of that bar. And if that's what we get, and you reject it, well then what you're going to have, and the oil market loves to do this, folks, then you're going to have a nice consolidation. And that would end up being a nice buy at the $70 level because what you have on the other side of that $70 level, it'd probably trade from 70 to 99 for a good period of time. So that's going to be interesting watching that shake out because Oxy does pay a 3.3% dividend. At 70, that dividend would be almost like screening about a 4% dividend. So that's something you want to keep your eye on. And we'll stay right with that sector for a second. We'll go over to ExxonMobil. So ExxonMobil is giving it up on price, volume expanding a little. You know, Exxon has the same high volume low. I expect you're going to go after it. You know, we'll see whether it breaks down from that level. Exxon is in a little different situation here. Exxon has broken into, in the past, into the 2008 bar. The top of the 2008 bar on Exxon is 81. High volume, no doubt, you know, but Exxon can basically get down to, well, I think, you know, we'll see how 81 looks. 81's probably just still all right. So that's going to be interesting with Exxon, too, because you want to line a couple of these large ones up. Exxon right now is paying a 2.9% dividend. Gets down to 81, that's probably going to push it over 3. That's what I expect it would be. If we go back to the gold stocks for a second, what you have inside the gold market is this, folks, is that there's a few gold equities that absolutely just blew by the downdraft of October 30th. They had already tested the 2008 lows first, did that with lighter volume, rejected lower price on the monthly. Then came into the October 30th and 31st swing lows, which had some monster volume, and took those out. That is encouraging in a huge way that we're going to see more of those equities get up and over that level, meaning the October 30th level. And once you get through that level, you're going to see some real action in this market. So I expect what we're going to see after Thanksgiving, next week in particular, is more volatility in the market. Not sure what's going to put the volatility inside the market, but it's telegraphing it's going to be here. The bond market is also telegraphing that. This bond move today, bonds have been building cause, but this bond move today just seems like it came out of nowhere. We've been building cause for quite a while, but the expansion of price this morning at 1 o'clock this afternoon, was just huge. And the second expansion that came across at 1410 was just a monster, too. I'm sure that more than likely what it had to do is there was probably some bond sales out there. And there's a monster in here buying the bonds and buying the bonds hand over fist. So what we've just taken out all the small swing points from building cause going all the way back to the 24th of October. So there was a 5-year bond, expert is telling me in the den here. So there's a 5-year bond at 1 p.m. that came in at 2 pips below the current bid. That's interesting. So this is really crazy. Oh, I got it. Okay, so that's even heavier. So check this out. What that is saying, that's how hungry they were for the bonds, folks, okay? That they were coming in at a less expensive price, actually paying more for bonds, right? Would that be correct, Mark, right? They're paying more for bonds than the market was at that particular point. That's pretty amazing. And so what does that mean? There's more demand than there is supply of bonds. Yeah, perfect. Thank you. See, you taught me well. It's a beautiful thing, man. Thank you. Because it's so wild, folks, there's no doubt. Once you wrap your head around bonds, they're dynamite. But, man, it takes some wrapping around your head around bonds. Because higher price, lower yield, higher price. Anyway, once you get it, you really get it. And that correlation also, what you do want to get, is that you have to get the correlation in your head. And don't try to do those all at once. But then you want to get the correlation in your head. What currencies, how currencies are moving against other currencies, and then currencies against those bond structures. Because that is kind of like the formula. Well, that is the formula as to where money will move to. We talk a lot about, I'll bring up right now, the bond yields across the world. It's like, oh, yeah, really? Okay, so in our case, it's 2.262 on a 10-year right now. And every time, I don't care, you don't have to be a technical person, but when you look at the yields that are across the world, okay, it's like, okay, France is 1. Now, France is 1, so we're paying we're paying 120% more than France. 120% more than France, and our dollar is going up and their euro is going down. What is it? That doesn't take that genius. That takes like, oh, really? Let's go to Italy. Italy is paying 2.1%. So Italy's a great place to go, but they're broke. Spain, that's even more bizarre. I don't know how Spain ever got down to 1.9. So check this out. Spain is paying 1.9 right now. You get the gist of it. The gist of it is that these rates are going to go lower. And that's going to be just dynamite for the real estate market. There's no two ways about that. Inside the real estate, hey, check this out. This is going to be a trip watching how this shakes out. So what happened out here this morning inside Fannie Mae and Freddie Mac, okay? Fannie Mae and Freddie Mac are going to let borrowers who have gone through foreclosure buy back their homes at market prices under a policy shift announced by the regulator. I'm going to walk you through this, so you can see, what is going on inside the Fannie Mae, Freddie Mac, because they are the biggest owners of mortgages that are and have been in foreclosure. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow up 17, Nasdaq's up 4, S&P's are flat, and we were talking about Fannie Mae, Freddie Mac, and what you have happening, folks, is this is how it's going to work. So Fannie Mae, Freddie Mac are going to let borrowers who have gone through foreclosure buy back their homes at market prices under a policy shift announced by the regulator for the 2 U.S.-owned companies today. The change outlined by the Federal Housing Finance Agency in a statement today essentially gives some of the people who owe more than the homes are worth a way to cut mortgage debt. The step follows criticism by consumer groups and some Democratic lawmakers that have called for broader principal reduction of the homeowners. Okay, so let's cut to the chase. So watch this. This is when I walk you through this, you're just going to crack up, because when I first just saw this come across, I said, really? Now, it'd be great. Listen, I'd love to have everyone get their houses back. That'd be a beautiful thing. This here, though, right? So our experience, my experience specifically, okay, we buy a lot of houses, and we buy every one of them off the court, right? What happens with every house that is a Fannie Mae or Freddie Mac mortgage, folks, let's say that the house is worth $200,000, and the debt that's on the house, it might have started out at $170,000, but what has happened, because these houses have been in foreclosure for 4 or 5 years, the average house in Florida is about 5.5 years, okay? What ends up happening is that $175,000 is going to turn into like $400,000. They pile everything on top of them, okay? And Fannie Mae and Freddie Mac, guess what? They come in and bid every house at $400,000. Whatever that top number is, that's what Fannie Mae and Freddie Mac does. They don't let one house go to bidders, period. So they take them all back. Once they take them back, what they do is that they send crews in. Sometimes they just paint them, slap some paint on, put a couple rugs in, and then they'll put them on HomePath. If you go to homepath.com, whatever area you're in, nice site. When I read that press release, what the press release is saying specifically is that they will put them back out on market. Now, the real key is going to be there. What is market number one? My own experience has been the market that Freddie Mac, Fannie Mae normally put them out at is over market, and this is why. It's a sweet deal too. You know, even when I say over market, let me walk you through how this works, because this is pretty cool if in fact you can pull it off. When they sell the houses, they'll sell it to you with financing right there, and sell it with 3% down, 5% down, no title insurance. So that's a good deal in that case, as long as you're not paying way too much, okay? Because you can leverage that out, rent them out, or whatever, okay? And that's what Fannie Mae and Freddie Mac have been banging on. That's why people will buy them, okay? That all being said and done, number one, you still need a fair market value for the people to get back into the house. But when you read that, it's like, okay, you have a house that let's just say it's $150,000. Let's say that by the time all the fees were down on it, you run it up to $270, whatever, right? Now it's worth $150. The statement's saying they'll let you buy it back. What the statement isn't saying is what? How is the person that couldn't afford to pay their monthly bills, period, going to come up with $150,000? They can't come up with it because the Fannie Mae and Freddie Mac rules dictate all mortgage lending, so they certainly can't try to get another loan at that particular price. Now that may change, and they may turn around and reloan the money to them. It's not in the statement yet. You know, so we'll see how that whole thing is going to shake out. You know, what I can tell you though is that in Florida, we still have quite a bit of foreclosures that have been happening, but that also is winding down. You know, and where we were basically at the epicenter of it, along with Las Vegas. Las Vegas came back a good year and a half ago, easy. The reason that Florida lasted a much longer period of time was because of the fact that Bank of America had that robo scandal, meaning that they were signing papers that countrywide, they were signing papers that they shouldn't have been signing, and foreclosure stopped for about a year and a half. there'll still be quite a few foreclosures, but the winding down process is starting to happen, So we'll see where that whole thing does shake out. But you're still going to come up with money. That's the bottom line. Now, market out here coming into tomorrow, we had a day before Thanksgiving. We had a big storm coming up there. I don't think we're going to see much move in the marketplace. What we have had out here today is that the small caps are still dictating that they can't handle higher price. And, there's a lot of commodity equities inside the small caps. But, the way it may be the oil and gas small equities that are pushing this down, it's a lot harder to really drill down into the Russell 2000 because, of course, there's 2,000 stocks, and there's not one that has large weighting structures like inside the NDX 100. But this Russell 2000 is saying that, guess what? Can't handle higher price. You're at 117, 107 is game. The three Qs, if we go over the NDX 100, NDX 100 continues to go higher, light volume. The biotech index is the number that you want to basically wrap your head around. The biotech index, I expect it's going to hit the high first. The high is 302.79. Haven't got there. You're right next to it. And when you just get this close to it, you're going to hit it. I suspect you're going to fail there. And with the biotech index, once that biotech index gives it up, and it's given it up twice this past year, you see these stocks go fast and furious on the downside. When the biotech index give it up, get out of the way, because it's pretty amazing how it does go south. What we have happening inside the gold market coming into this close out here is that you do have buying. Someone's coming in here and they're buying some stocks, and that will power a few more of these right through that October 30th and 31st swing points. Those swing points. Those swing points, by the way, are crucial, folks, to get through with conviction. And thus far, the stocks that have been building cause to get through that with conviction, they're impressive. They're impressive in a big way. Royal Gold, Franco-Nevada, they both got through them with conviction. That's saying that the market itself, meaning the physical market, wants to go higher. And we talk about volume. On the 30th, we had 1.1 million shares. When Royal Gold went down, and then when it goes through there, you had 1.4, and then it followed it up with 1.4. That's how you want to basically break the supply lines. The demand line is breaking the supply line. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to come right back with some numbers for you. Dow Industrials up 11, Nasdaq up 4, S&Ps are flat. We're going to be right back. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Kristen Larson. Live in faith that the whole world is on your side so long as you are true to the best that you can be. Market-wise, let's take a look at it out here. The Dow Industrials are down 2, Nasdaq's up 3, S&Ps are flat. Gold contract up $3.90, trading at $1,199 an ounce. Now, gold, folks, okay, has been building cause. The number that you want to see gold get through is 1202.40. I suspect the way the gold has been trading out here today, actually, it looks to me like tomorrow may be the day. It's going to be really intriguing coming into tomorrow, because what we do have is this. You get the day before Thanksgiving. It's going to be a slow day. You have a huge storm coming into the northeast. This 1202 level, gold's been building cause to get into and get up over. It's unusual that it would happen right before Thanksgiving, but the way that the gold market in general traded the last half hour of the day today, someone was in here and they were buying. Not only just the contract itself, they were buying these equities. Silver up 27 cents at $16.65. Platinum was up 21 at $1,225. Copper down 4.5 pennies at 2.95. That's the copper market. Oil down $1.84 at 73.93. Now oil. OPEC is having a meeting Thanksgiving, and no matter what happens in that meeting, folks, they're not going to get along, whatever is going to happen. Why am I saying that? Well, oil looks like it's going to go to $70 like ASAP. It's been coming into its swing low today. Huge volume coming into that swing low. It looks like it's going to blow it away. Bonds. Bonds are the other confirmation that not only the market wants to go south, but bonds have gone north in an extreme way once again today. You had the 10-year up 11 ticks at 127.04 with huge volume. I'll bring us through that. 30-year, same deal, up 27 ticks at 142.29. And what that's saying specifically, there's not enough bonds. There's not enough U.S. bonds out in the marketplace. There's a huge amount of demand versus supply. King dollar. King dollar down 247 ticks at 87.96. The euro up 33 at 124, and the yen trading down 31 at 117.96. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Whoops, right there. There we go. That one? Yeah. Whoops, not that one either. Sorry about that. Where am I? Here I am. There we go. S&P, cash S&P out here today gets to 2074. We do volume of 764 million. Light volume once again. It did test the highs of last Friday, which was the 2071.46. Closed underneath them, and we'll see. I don't expect any heavy movement tomorrow in the marketplace. Next week, different animal. That's in your, on your S&P. Dow Industrials. Excuse me, folks. The Dow haven't tested the high yet. The spike high on the Dow from last Friday was 894. We got to 854 today. I do expect you're going to see that baby tested. NASDAQ Composite, I believe we tested we tested it out here yesterday. Composite was still up 3 points today. We're at 4758. We got to 4774. Composite, once again, will probably test that high. If we take a look at the correlations of the S&P, the SPY, this is 73 million shares out here today. You got the high of Friday was 207.84. We did 142 million shares. The NDX 100, the 3 Qs, what we'll have with the 3 Qs, 104.84, got to 105.15, and we closed at the 84 level. The Qs, yeah, they have no volume up there, but that little baby more likely will hang up there tomorrow. Now, the gold market. This is going to be intriguing watching this thing shake out. What we had with gold is this. We're at 1,200.40, and this has been building cause to get up and over the December 30th and 31st downdraft. That's where we came down with volume. We've been building cause now since the 14th of November. And it looks to me like we're going to make it. We're pushing into this area today, and we pushed into the area with expansion of volume. So it's pretty cool. It's laying right underneath it. Today we did 195,000 contracts. It came down with 300,000, so it needs more, but it's laying right underneath it, man. And that's what you want to look for. So the first surge, the second surge off the bottom. So the first surge off the bottom in gold, you had 290,000 contracts. That's when gold went from 1130 to 1170. That was on November 7th. The second surge in gold came on the 14th. We went from 1146 to 1192. 294,000 contracts. Then this is the subtle one. I love these subtle ones too. On the 19th, you went from 1173 to 1201.70, and you had 266,000 contracts. But you got to remember, we're dealing with 1202.40, right? What is that doing there? You're pushing into the swing with volume expanding big time. Today, same setup, 195,000 contracts. This thing wants to blow that away. You blow that away. If we blow that away tomorrow, guess what? You'll go right to 1255. It won't even stop. Why? Because what we will have tomorrow is a very illiquid market. What's going to be really weird about this, though, is this. It's like, what is going to make the gold market move to those levels quickly on a day with a slow market? And will we get volume behind that move? Oil. Let's go over to the oil market. We take a look at oil. So what we have with oil is this. Oil today down 2.6%. We're at 73.83, and you get some juice under this move, folks. We did 278,000 contracts. It looks to me like we're just going to basically slice and dice this area, get right down to 70. So they do have the OPEC meeting, but what we also have, well, here, check out the gasoline market. This is really cool, too. Gasoline, unleaded right now, is $2. This is wholesale unleaded. We pull this up, and what you're going to see, this gas pump, man, we are going to go lower in an extraordinary way, because this is an ABC setting up to 185 wholesale, and it can go a lot lower than that in the next leg, but 185 is a big number on the way down. Bonds, the ever-ready bond market, folks, has gone topside once again. It has the wide price spread. It has the accelerated volume. 10-year did it. 30-year did it. The 30-year already is into your price bar from the huge expansion on October 15th. October 15th is where we went from 142.13 to 148. Really unheard of. We are at 142.31 already. We're already into it. We did today 822,000 contracts. That is a monster number of contracts inside the bond market. And what we did have, I want to thank our Tiger, Mark and the Den, because what we did have is that at 1 o'clock Eastern Standard Time, there was a 5-year auction in the bond market. And what happened is that a bidder came in and bid 2 bips under the market, meaning under the yield, to get the bonds. That, folks, it's not unheard of, okay? But that is aggressive in an extraordinary way. So what that specifically means is that that entity will take bonds at a more expensive buying price for a lower yield. And what that did immediately is woke up that market in an extraordinary way. And let me tell you something. For folks that weren't at the bond desk today that are in that bond market, they are doing their homework right here, right now. Why? Because what ends up happening is that the allocations inside the bond market, they get a bid for them, and they're going to be out there bidding because they know someone has showed their hand right now. And when they're showing their hand like that, you don't show your hand once. That whoever was basically long and strong decided that, guess what? I need these bonds. I want them right now. I'm going to bid under the market for the bonds, or in this case, under the yield over the market for the bonds to make sure they get the bonds. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come back with our commodity expert at TFNN, our man, Mr. Andy Heck. Going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials down 2, NASDAQ up 3, S&Ps are off 2.5. And let's go over to our man, Mr. Andy Hecht. Andy, folks, has an outstanding show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. And don't forget, all the programming at TFNN you get right on your cell phone, folks. TFNN.mobi. If you'd like to get Tiger TV right on your cell, go to TFNN.com, then hit the Tiger TV on the top right-hand corner. You get the audio as well as the video. Andy, you can also test drive his newsletter, the Technomental Commodity Report. The way you do it, go to newsletters, trading newsletters, the Technomental Commodity Report, test drive it 30 days, absolutely free. Andy Hecht, what's going on?
Hey there, Tom. How are you?
I'm doing great, man. How you doing?
Good. Me too. Couple of things I just wanted to make people aware of. First of all, the natural gas numbers come out tomorrow.
Okay.
Because of the holiday Thursday.
And it was up 3% today. That's interesting, man.
Yeah, they're coming out tomorrow morning, 10:30 Eastern Time. You know, usually they come out the day after a holiday, but they're coming out tomorrow. So important to keep your eyes on that, particularly if you have a natural gas position.
Okay.
OPEC meeting Thursday, which you already announced, and God knows what that's going to be. I saw on CNBC a couple of hours ago, they interviewed the Venezuelan oil minister, and they asked him what he thought the fair price for oil was. You know what he said?
What?
$100. He's dreaming.
Yeah, he's dreaming, right.
He's dreaming.
Right.
And then, of course, Sunday, we have the Swiss referendum.
Yeah, right.
So we got a lot of things going on here this week while we're partying for our holiday.
Yeah, no doubt.
In the world of commodities, it's going to be a very, very interesting week. And I heard what you said about gold, and I am in agreement. And I think we're coming into a couple of real thin days. Let's not forget, that Thursday, Thanksgiving Day, markets are open in Europe.
Right.
And, if this gold market gets up a couple bucks more, this thing can kind of vacuum here.
And look, I can tell you, I put the gold report out earlier today, and I was looking at it. I said, you know what, this thing's ready to go. Because what has happened, folks, is this, is that you have inside the gold market a few equities that absolutely just busted right through the downdraft of October 30th with power. I mean, they just
I saw even some little ones like Harmony and those.
Yeah,
they were very strong today.
No, they went through it like, hey, see you later, man. This thing, we're going topside. And what they've done is they've already tested the 2008 lows with lighter volume, so they've rejected those prices. When you have both going on, it's like, okay, man, and that bond.
Right, and the other thing that I really like here, silver is gaining on gold. The silver gold ratio has gone from like 74 to 1 to under 72 to 1, which means silver's showing some strength. Platinum's showing a little bit of strength here, up above 1223. So it looks good. The only oil. That's the other side of the coin, and copper is looking pretty weak to me.
But you know what was cool? So, there's no doubt they both look bad, okay, and weak. Yeah. But that is telling me more that even whoa, baby, that means that gold is really strong. Because the dollar was tight. Dollar's at the high still, folks, and it's like, okay, so if oil's going down and gold can still hold its own and go up, that says a lot, man. That says that, this is a different...
it's going to be really interesting to me to see what happens after this referendum. If it passes, it's a pretty clear no-brainer that gold's going up. If it fails and gold holds, that's going to be a real sign of strength for gold.
Yeah, it's going to give us information. There's no doubt about that.
It absolutely will. Listen, by the way, on my show today, Tom, I'm going to do like a kind of a special show. I'm going to be talking about commodities for the rest of 2014, first quarter of 2015. And
nice.
I'm going to go through the list of commodities, ones that are going to be affected by the weather, because, we got a very early winter here.
It's huge.
And ones that are going to be affected by the dollar, because we have a dollar that's running up against the highs. So I'm going to talk a little bit about that today on the show. So out of the normal kind of format for the show, just talking about the dollar, the weather, and how each of the commodities we cover are acting now, and how they'll act, depending upon what happens in each.
Yeah, what's going to be so intriguing here is that what has happened when I say in the past, folks, I'm just talking maybe the last 5 or 7 years, is that the weak dollar got all of these commodities going south, north in a big way. And then you get the strong dollar happening, and they've been getting hit. This divergence that Andy and I are talking about, meaning that, oil goes south, and gold holds its own and actually going north, is a big deal, because there's plenty of analysts that look at the aspect of so many ounces of gold as a barrel of oil,
Right.
So, it's going to be intriguing watching this thing shake out. And
absolutely. I'm still from the school, Tom. You might be right. We might get oil down to 70, but I think I wouldn't be surprised to see this thing maybe spike down to 70, go back to 80, and die. I think that's the sweet spot for oil, and I think it's very managed. But we'll have to see what comes out of OPEC.
Yeah. Listen. I agree. But the way this is trading today, man, this thing to me today. So check this out. This is wait to hear this one. This is really going to be bizarre. Now, 93, 73, $20. This is actually telling me now, Andy. So watch this. Okay, so here I'm going to give you two different numbers, folks. The conservative number is $70. Okay. Because I got to take the 8 point from $83.58 on the 16th of October. But when you're doing an ABC structure anyway, basically technical analysis is an art form, folks, more than a science. That's the reality. And so what happens is your 8 point conservatively, the most conservative 8 point I could take is the 83. Now, without getting liberal and staying pretty conservative, that 8 point very well could have been 93. If it's 93, guess what? We're going to have $55 oil in a heartbeat. In a heartbeat.
Right. The only thing I'll say about that, and this is technical from my point of view,
right.
We had open interest at 1.533 million contracts on November 13th.
Yep.
Right now we have open interest at 1.379. That means that open interest has come down around 6% or so in the last 10 days. So we have a market that's moving south with lower open interest. I think the final longs are getting out here, and that's not necessarily super bearish.
And that's not super bearish.
Right, because you have the long, you need capitulation before you put a bottom in. So the fact that open interest is coming down, if open interest was building with a lower price, I would say, ooh, this has got some, this could continue going down. Because you have interest being lost in the market.
Because what you would be saying there is that as people are buying on the way down, they're losing more money, you're saying specifically. So,
well, either that or there's new shorts, trend-following shorts coming in, pyramiding their short positions. There's a lack of conviction here, so that's interesting. Usually, what I always like to think is, in a really strong market, when a market's going up really strong, you have building open interest with price. In a market that's very bearish, you have building open interest with a down move. Here you have contracting open interest. So that's kind of got to give you a moment to pause.
Right. Okay, cool.
So we'll see. We'll see what happens. Listen, you know what? OPEC. This is the most important OPEC meeting since 2007.
Yeah, I like that. And it's 2014, right?
That's right. And last time they had a different problem. The problem was the price was too high.
Stay with us for a second. We're going to come right back.
Sure.
Dow Industrials, folks, closed down 3. NASDAQ down. NASDAQ up 3. S&P's down 2.5. Andy and I are going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Hecht, and we are talking commodities, and we have the OPEC meeting on this Thanksgiving Day. Andy, let me ask you, it seems that for a long period of time, I mean, I guess OPEC is still the monster in the room, there's no doubt. But they haven't seemed to be a monopoly as much as they have been in the past. I mean, they seem like they've been quarreling for the last really good 10 years.
This is true, Tom. Let's turn the clock back and remember that before 2004, oil never traded above $41 a barrel.
Right. Right.
So when oil is, and over the last 10 years, the higher oil price has brought in a lot of new production.
Yeah.
A lot of higher cost production. So with the more production, OPEC becomes less important. However, when the price goes down, they become more important.
Oh, this is cool. Okay.
Production goes underwater. So it's a very interesting time. And as I said before the break, this is the most important meeting since 2007. Because in 2007, I have a long-term monthly chart up here. The price was, let's see, it started, it was like 60 to 90 bucks a barrel. But we have to remember, that was prices that were never seen before.
No, I know.
So they were grappling with this higher price and how they could maintain market share and so on and so forth. Now, on the downside, they've all gotten, pardon the expression, fat and comfortable with these huge oil prices. And, particularly, OPEC's made up of 12 countries. Some of the countries in there, like Venezuela, they're in big trouble with this oil drop.
Right. So let me ask you this, right? This could be really interesting. I mean, if, in fact, they got oil down to $35 and $40 again, which no one believes that they want to do, but if, in fact, they did, would that put a few of those OPEC countries really in charge again?
Well, yeah, because, we're not going to be able to, as the U.S., we're not going to be oil independent there because we're just not going to produce. They'll just shut down production.
Sure.
So then the world will rely more on OPEC oil. And also, the Russians will be in big trouble there. I mean, big trouble down there. So, yeah, the OPEC countries will the lower oil goes, the more influence OPEC has. Well, it's not, and I wouldn't even say OPEC, I'd say the Saudis. It's really it's all about the Saudis.
So this
are the strongest.
This is intriguing because in any other era, but it could happen in this one too, that would be like the equivalent of war, if in fact it'd be financial war, but it could get a lot more than that if in fact they wanted to destroy the price that dramatically, right?
Mm-hmm. It could be. It
doesn't make any sense, though.
War.
Yeah, it's interesting. In one way, it makes sense that you put everyone out of business and then you start ramping it up again. In another way, it almost doesn't make that much. It doesn't make any sense at all because inside the oil business, it's not like the mining business. The oil business, you can get up and going very quickly, right?
Yes, and it's different. Because, look, what you're talking about is what's going on in iron ore, how Glencore and BHP and Rio Tinto are putting all the high-cost iron ore producers out of business because of the low price of iron ore. That all makes sense economically. Oil's a different story.
Yeah, right.
You know, the Saudis are depending upon the U.S. and you know, other coalition partners in fighting ISIS because they're not worried about a low oil price. They're worried about ISIS in Syria and Iraq coming into their country because, you know, they have all the holy sites.
Which can happen quickly, you know.
Yes.
I think that's...
And, you know, interesting, I wanted to bring it up quickly. You know, when I saw you last week and we were chatting, you know, we talked about the fact that the one currency now...
I know.
ISIS is announced last week that they're going to come on. They're going to have their own mint, their own currency, gold coins, silver coins, and copper coins.
Yeah, it's
very interesting.
It's a big deal, folks. There's no doubt.
It's disturbing. I find this very disturbing.
Right. There's no doubt about that because that's a hard currency. And guess what, folks? No one in the world has a hard currency. So it means something.
For these guys to have a hard currency, that's a very worrying situation. I mean, it's all from stuff they've looted. You know, that this ISIS has looted banks all on their trail, particularly in Iraq. And, you know, they can set up a mint with this looted gold and other precious metals and base metals.
Yeah. I mean, I think if the world hasn't learned, like, that this can flip in a heartbeat, and they could get into any of those countries in a heartbeat, well, you better smarten up, folks.
Right, and that's why the OPEC meeting is important. Because, you know, it's really the Saudis who are the most influential there. They have the biggest oil reserves in the world, and they're very tied into the U.S. They're also tied into the Russians, and whatever happens there is not just about oil. There's a lot more going on there. Mark Richwell said that oil is the blood that flows through the veins of the world. Oil is a highly political commodity. So you can't just look at this meeting as just the price of oil. There's so much else going on there and so much vested interest.
Yeah, it's a great point. Great point. Listen, folks, you stay right there because our man, Mr. Andy Hecht, he's going to be coming up in 20 minutes. And so talk to me about what you're going to go over on the show today, Andy. I know it's going to be...
Okay, we're gonna basically go over what the dollar's done since May 8th when it's exploded. We're going to talk a little bit about what the weather is doing here. You know, as of November 1st, it's a pretty cold winter. And I just want to, you know, put some warnings out there about, hey, I'm going to go over each commodity and say, hey, you know, which are weather-related, which are dollar-related, and what to look out for here in the coming months. Because I think that, you know, this is kind of a snapshot between now and the end of the first quarter. Because moves in the dollar and whatever happens in the weather is going to affect these commodity markets.
No doubt. Well, listen, man, you have a great one, safe one. Appreciate the update, and we look forward to listening to you in 20 minutes.
And have a great Thanksgiving.
Yeah, you too, man.
Take care, buddy.
Eat lots of turkey. Gobble, gobble, gobble.
Take care, Tom.
Yeah. You know, Thanksgiving, too, is a great holiday, folks, okay? And as you're traveling out there, please be safe, because I know in the Midwest, you folks up north, there's going to be a lot of rain, there's a lot of snow. It's already evidently starting right now. And hopefully that stops very early so everyone can get where you want to go safe. And just slow down, folks, and, you know, don't be drinking and driving. That's the big number there. Get where you want to get. Folks want to see you, want to have a good time. This gold market is getting so intriguing, folks, because what we did have coming into the close out here, let's go to Rheingold Resources for a second. What you're going to see with a lot of these gold equities, someone came into the close and bought a lot of stock, folks. Rheingold, last 10 minutes, did, so we did 880,000 for the day, right? And check this out. So 60, and it was 200,000 of that. I'll see if I can find this trade, was... In fact, I will get these trades for you. 200,000 was right at the very end of the day out here. QR, let me just see if they did it at the same time. So AQR, 1,600, that was 8,000 shares. 16, no, I don't have it. Interesting. Let me go pull up AEM and see if the same thing happened. What happens, which is kind of neat, yeah, AEM, same thing happened. So check this out. An Eagle, you had 2,600 shares traded. At the end of the day, we had 163. Yeah, look at this. You had 160, 300, 460. 460 out of 2.6 million. You know, so there's a monster that's coming in here right now. And most of the time when you see that happen, folks, they're not going to come in once. They've in the market, they'll end up coming in again. Let me see if it was in Gold Corp. It was in Gold Corp. So they spread this right across. Gold Corp did 9.5 million shares today, and the last two buys, let's check this one out. This is pretty intense. See, the last two buys came in at 2.2 million. So, what is that, 9? That's almost 20%. How did they mask this thing? 1 second. Oh, with Gold Corp, they didn't. That's interesting. They didn't even try to mask it with Gold Corp. Gold Corp, they just came in and just whacked it. And not only that, they bought it over the market. In fact, yeah, they bought it over the market. Someone just did a trade. Man, they bought a lot of shares. Someone just turned around and bought 21.45. Is that right? Yeah. So it closed at 21.26, but someone came in at 20 past. And now this would have been an over-the-counter deal, but they registered it, and they did 450,000 shares at $21.45. Let me just see if that is registered in AEM also. Not in AEM, GOLD. Nah, not in GOLD also, but someone's in there. There's no doubt about it. NGD, let's go take a look at NGD. This is New Gold. So that little baby, same deal. New Gold at 6.3 million. Oh, yeah, look at this one, too. Oh, man. They said out of 6.3 million, they did 1.8 million in the last 10 minutes. Oh, and they came in after the close, too. They bought another 382,000 over the market. They're paying over the market. Oh, this is a trip. You stay right there, folks. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees. Live radio Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And, you know, I may have just found one of the reasons why that we had the buy-in in there and the spike, folks. So check this out. At 417, now this would be someone that knew that this was going to come down the pike. Goldman Sachs and HSBC was sued in New York over claims that they conspired for 8 years with 2 other companies to manipulate platinum and palladium prices, and what the plaintiff's lawyers say is the first class action lawsuit of its kind in the U.S. Standard Bank Group Limited in a metals unit of BASF SE, the world's largest chemical company, are also sued. The 4 companies used inside information about clients' purchases and sale orders to profit from small movements in price for the precious metals used in products ranging from jewelry to cars, according to the complaint filed today. The complaint by Modern Settings LLC, a buyer of the metals, claims the companies were privy to and shared confidential non-public information about client purchases and sales orders that allowed them to glean information about the direction of platinum and palladium prices. Similar lawsuits have been filed this year in Manhattan, accusing banks of rigging the benchmark price of gold. Authorities around the world are examining the gold market for the signs of wrongdoing. Regulation, now here we go. Regulators tighten security of the benchmark after uncovering price rigging in interbank loan rates and currencies. Silver became the first precious metal to change traditional procedures in August, and the Intercontinental Exchange will run a replacement for this 95-year-old gold fixing. Then there's going to be a new platinum and palladium fix starting on December 1st. Now, what you have here, folks, is this. We have had, for a long period of time, inside the metals market, plenty of folks that have been in this market saying that, you know, J.P. Morgan, the large gold banks have been manipulating this price for a long period of time. The silver shot in the market has been extraordinary for a huge period of time. What's going to get intriguing here is this. For just as long, for 30 years, for 20 years, no one has listened, okay? It's come up to regulators a dozen times, okay? It hasn't gone anywhere. Guess what the difference is here? What the difference here is that the banks, everyone knows are crooks now, okay? There's just no doubt, okay? They've paid billions of dollars without any guilty pleas, but bottom line, they've got caught with their hand in the till on a continual basis. The biggest one that the hand is in, though, is this intermarket currency deal that they've pled guilty to, number one, and that affecting all the mortgages. So it's possible that we'll see that does this suit actually go anywhere. See, all that has to happen in one of these suits is get the actual traders or who's ever being accused of this manipulation, get them into discovery and get them to testify. Because what will happen, because the feds are so highly involved right now, guess what? Yap, 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 yap. And once they start yapping, they're all going to be running. And they're going to be running for the hills. And when that happens, folks, you're going to see these prices move, you know. So this is going to be intriguing, watching just how this does shake out, you know, because there's no doubt. Just think about this for a second. The aspect of it's very easy to manipulate a physical commodity market. Gold and silver, that's a small market, folks. That's the bottom line. We know that they already manipulated the currency markets. So, you know, the believability of this is pretty easy. You know, and in this particular case, Andy, heck, you stay tuned for Andy, because more than likely he'll talk a little bit about this, because he knows a lot more about the physical aspects, because he dealt with so many hundreds of millions of physical aspects inside. And I suspect that looking at the first blurb coming across on the platinum and palladium deal is they probably have a few smoking guns and emails, of course. You know, the amazing thing is that the amount of emails that get pushed around from folks that are basically shouldn't be putting anything in writing is just extraordinary. So we'll see where the whole deal goes. But as I did bring up, I brought up a few more of the gold equities, and sure enough, what you do have is that there was a huge amount of buying after the fact. Well, we know this is what you have happening, which is amazing. You had buying before the fact, 20 minutes before the close. This got filed, well, it came across the tape at 4:18. Then what you also had is, let me just see what the time frame on this is. GG. So when they bought over the market, This is interesting, yeah. When they bought over the market, so like Gold Corp. Gold Corp closed at the 21.26. It's trading out there at 21.45, 21.40. Big numbers. 21.45, so that was 16.39. So that's someone after the fact that's buying it. 450,000 shares. Yeah. Their bottom line, we'll see where this baby does shake out. But what that would open a whole another ball game. Yeah, and as Terry says, one of the tigers in the den, what they should have done is they should have consulted the IRS to learn how to lose emails. Yeah, that's what they absolutely should have done. And I'm sure there's no doubt. Yeah, that's so true. The hypocrisy, folks, that we deal with every day is just crazy. What we do have, though, and just remember that, right? The country is great. And stick up. When you see something, right, when it's in a bureaucracy, folks, go right at it. When you're having conversations in your cities and you think that, you know, the bottom line, you know, that something's not right, go right at it. That's what's going to keep this country in tune. And, you know, we all can, and believe me, I'm cynical beyond belief about the amount of soft money and all of that. Well, when you hear about it, and I don't care if it was even your friends, say, oh, yeah, well, I can do this. Well, say that's wrong, okay, because that's not where it's at, because someone's going to get hurt on a much larger basis, you know, and that is important in the context of where you want to go, where we want to be, and what we want to be, you know, and it's going to be a constant battle, because what has happened, there's no doubt, what has happened is that larger money is involved in everything, and larger money moves politicians much easier. Politicians move the agenda. The agenda goes back to the government checks, right? That's what it comes down to. You know, this Hagel basically resigning, it's like, oh, man, I'm looking at Hagel and I say to myself, okay, what is this all about? Is this about the Democrats, the Republicans, the ISIS, or is it about the, you know, the corporations that say someone's not getting something? That's all I can see. Is like, what is this about? You stay right there, folks. Man, Mr. Andy Hex coming up next. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. You stay right there. Man, Mr. Andy Hex coming up next. Wow! Go get him, folks.